As a new day trader, you may be wondering, well, how much money do I need in order to start day trading? And the answer is millions and millions of dollars.
What?
Absolutely kidding, because in some cases, you can start day trading or investing with just $5. And in this video, we're going to talk about some of those different things, maybe some rules and things that you weren't aware of. And then we're also going to talk about how to make the decision for yourself. So be sure to stay tuned. And if you don't know who I am, I'm Lakeisha Tomlin, former engineering manager turned day trader. And now I help people become profitable day traders in 60 days, sometimes less. So in this video, we're definitely going to cover how much money you need in order to start day trading. And first of all, it all depends, mainly because it depends on your broker. And some brokers have a minimum amount in order to start trading on their platforms. Some, if you're looking at cryptocurrency, Coinbase would be some that or one that you can start with just $5 in order to trade certain cryptocurrencies. If you're looking at the Forex market, some of those brokers may only require $200. And then if you're looking at more of the established companies like Webull, TD Ameritrade, or Robinhood, or somebody else, then you may need a lot more money in order to start trading, depending on what you are looking to trade. And going into my second point, that is dependent upon what type of trader you are. And first off, you need to understand that there are two types of traders. So the first one is someone with $25,000 in order to trade. And second, somebody who doesn't have $25,000 in order to day trade. And that is specifically in the United States. $25,000 is an important number, especially here in the United States, mainly because for those who are looking to day trade, if they don't have that amount of money in a regulated broker, then they are not able to day trade. And there is something called a PDT rule, which is the pattern day trader rule, which basically says you can't make more than 3 round trips. So a round trip is buying and selling on the same day within 5 consecutive days. And if you do, you can be flagged as a pattern day trader. Now, keep in mind that this is mostly for regulated brokers, and that is a whole other conversation. So if you want me to make a video like that, then go ahead and comment below. And also, if you are living outside of the United States, there may be different rules and regulations depending on where you live. So go ahead and definitely check those things out. I am not an expert in that at all, so I am not the best resource for that. But basically, do your research and figure out what the rules are in your country, wherever you are trading from. And just know that some other countries may not require this $25,000 like they do in the United States. It may be a number that is much less, or they may not even have any regulations whatsoever. So once again, go ahead and do that research yourself, or contact a professional in terms of taxes or any of these rules. Another option when it comes to bumping up against this $25,000 rule, if you don't have that amount of money, then another option is to look at Forex trading on an unregulated broker. So the broker that I use that is unregulated can be found in the description box below. I've definitely loved this broker. I've been with them for about, I want to say 4 months now, haven't had any issues and just really like the service. But basically, using an unregulated broker, they are not subject to the same rules and regulations like some of these other big brokers that we know of, like TD Ameritrade and others. So on those accounts, you can start trading, especially with the broker that I'm with, you can start trading with about $200. And that's the amount of money that I initially put into the account. And then later I put in more as I gained more comfortability with this broker, and then just with Forex trading in general. So I've only been trading Forex for about the past 4 months or so. And it's been really eye-opening and really great experience so far. So by asking yourself, what do I want to trade? If you want to trade something like cryptocurrencies or Forex, then you don't have to worry about the 25K. But if you're looking to trade something like options, which is pretty much only available on some of those bigger brokers that I talked about, like Robinhood and others, then you may need that $25,000 if you want to do more than 3 round trips in a 5-day period. If you want to do less than that, then it doesn't even matter. It doesn't matter how much money you have, then you will be able to buy and sell in the same day as long as you don't bump up against that rule. And I will say that before I had 25K in one of my accounts, specifically, it was TD Ameritrade and Robinhood. I did multiple round trips, and on both accounts I was flagged. And basically, it's not like they're going to ban your account. Basically, all you're going to get is a warning. They're going to say, hey, you've bumped up against this PDT rule. Either deposit 25K or stop trading with this little account. So that's basically what is going to happen. So now that we've talked about the PDT rule, the third thing we definitely need to talk about is how much money you actually want to put into the market. And like I said, there are some brokers that only require $5, or some brokers that may require a little bit more, especially in Forex, $200, but still it's definitely way less than $25,000. And with that being said, you need to calibrate your expectations. So what I mean by this is you're not going to put $100 into the market and expect to become a millionaire within a month or even a year. It's going to take a lot of work and effort on your point in order to grow that account. So for instance, if you started off with $100, then you need to grow your account by another $100 in order to make 100%, giving you $200. So if you had about $1,000 and you made that same $100, then that is going to be a 10% increase in your account. And if you had $10,000 and you made that same $100, then that's a 1% increase in your account. So basically, as with anything, the more money you have, the better chance that you have at growing that money much more quickly. That has definitely been my experience. But there are times when I'm trying to challenge myself and to grow an account, which I actually am doing right now. And it can be challenging, but I understand what the expectations are, especially if I'm starting an account with just a few $100s or even $1,000. I know that I am not going to make my $1,000 back with one trade or maybe even a couple of trades, especially if I'm only risking $100. It may take a little bit longer than I expect, but at least my expectations are calibrated. And for you, you have to do the exact same thing and just be realistic with that amount. So when I started trading, I had about $1,000. And the biggest thing that you can do in order to make sure that you hold on to that money and potentially grow it is risk management. So one of the things that really tripped me up very early in trading, I started trading options. Well, actually I started trading crypto. Crypto was fine, but then when I went to options, it was just a whole other ball game, and I lost a lot of money, mainly because I was over leveraging. So I took this $1,000, actually it was more than that, it was closer to $10,000, and I was over leveraging like 50, 75% of my account, mainly because I was still learning options. And yes, I was making some money, but then in those situations, I was losing that money right back. And before I knew it, I had lost so much money and I had to take a step back. So my advice to anybody that is trading or investing, outside of calibrating your expectation, is to manage your risk. So a good risk percentage, it varies for everybody, but basically for me, it has been anywhere between 1% and 2%. Now I'm actually working on my psychology, trader psychology. That's more of an advanced topic, but basically you'll hear a lot of pro traders talk about this. And it is a really serious thing, really, really serious. And basically it is me leveling up the amount of money that I risk at one time. So for right now, 1% to 2% is very comfortable for me. There are some traders who don't risk any more than that. And then there are some that may risk 5% to 7%, but generally I don't see anybody risking more than about 10% of their capital. And usually at this point, they have a lot of money in the bank already. So it's okay if they risk 5 to 7% because they're not gonna go hungry or homeless by risking that amount of money. So another thing is just this risk management piece that I really want to drive home, just because I lost so much money. I've read so many stories of people losing their homes and their 401ks because they just got crazy with trading. And I definitely don't want that for you. I definitely don't want that for me, which is why I'm glad that I wised up really quickly, but I don't want that for you because it is a serious thing. People's lives have been ruined. But on the flip side, people's lives have been greatly improved and just had a better quality of life because of trading. And I definitely want you to be one of those people who are able to experience the freedom and the quality of life through trading. Currently, I am running my own business, and it is because of trading, more so investing. And if you're interested about my journey and how I made $100,000 in 6 months, then go ahead and check out the link in the description box below, where you can get this free guide where I pretty much break everything down and everything that I had to learn, and I'm giving it to you all for free in that guide. And finally, the final point is whatever amount of money you decide to risk when it comes to investing or trading, because there is a difference between the two, but basically whatever amount you start with, you have to be comfortable with that amount. And basically the way I approach investing or trading is whatever money I risk, I assume that I already lost the money. When you go to the markets with that mindset, then there's really nothing to fear, because you're not putting your car note money or your mortgage money or 401k money into the market for trading. And trading refers to short-term investments. So when you go with that mindset, there is nothing to fear. And it doesn't mean go crazy. We talked about risk management a couple of points before, but basically it is the best way to approach the markets and the best way for you to ensure that you have long-term success. So if you love this content, go ahead and give this video a like for the YouTube algorithm, so that way other people can find this information. And also hit that subscribe button, because I will be posting more content like this based on my experience, showing you technical breakdowns, showing you some of my wins, losses, and all of that good stuff. So go ahead and subscribe, and I will see you next time.